I see this climate risk as the single biggest and most certain and formidable risk that mankind faces.
Had you had an interest in business such you went right to Harvard Business School?
The easiest place to get into in those days was Harvard Business School.
So Lehman was on the verge of going bankrupt, but in hindsight, is there anything you could have done differently with respect to Lehman?
Boy, I'll tell you, I don't think there was.
Would you fix your tie, please?
Well, people wouldn't recognize me if my tie was fixed, but okay. Just leave it this way. All right. I don't consider myself a journalist, and nobody else would consider myself a journalist. I began to take on the life of being an interviewer, even though I have a day job running a private equity firm. How do you define leadership? What is it that makes somebody tick? After you left as Secretary of Treasury, Hank, you did something that was unusual for many secretaries of Treasury. Many of them go back into the finance world, or they go into the finance world if they hadn't been there before. You chose not to do that.
Well, I really enjoyed my business career. I had 32 years there. I had, an opportunity to serve my country. And what I really wanted to do was take my experiences and apply them to addressing two of what I believe are the most pressing issues of our time: U.S.-China relations and climate change.
Many people say that when you're in the finance world, you get on a merry-go-round and you can't stop making money. But you basically said when you left Treasury, look, I have enough money and I'm going to go do nonprofit things. Is that right? Yeah,
I never had what I call the disease or the addiction to money. When I went to Goldman Sachs, it was 1974. The firm had had a couple lost years. That I was interested at that time in really working on financial issues, working with clients. I was interested in markets.
But when you were at Goldman, you were not a person who bought your own private plane. You were not a person who had a big house in the Hamptons.
No, we continued to live in the same house we built when I was making $36,000 a year. When I go skiing, it's at a little area called Arapahoe Basin, where it's not a place where fancy people go.
In climate change, is it your view that climate change, as we have called that occurrence, is it due to human activity, or would it have occurred without human activity?
David, it's been well documented that it's largely caused by human conduct. And this poses an enormous risk for our economic security, for really our social stability. I see this climate risk as the single biggest and most certain and formidable risk that mankind faces.
Do you think the Paris Accord, which the current administration has pulled the U.S. out of it, though I think technically we don't go out of it for another year or so, those people who in the government say we don't want to take climate change actions that some people like you are advocating, we want to get out of the Paris Accord, what constituency are they appealing to? Who is the constituency that is saying, please, let's not do something on climate change?
I believe that there are very strong vested interests that have a different viewpoint than the average American. If you look at the average American, there's a high percentage of people that are concerned about climate change. It's just not their number one issue. But when you look at all of the industries that have a vested interest, beginning with the oil industry and all of the carbon-based fuels, and for instance, I think one of the things that's going to be very important in dealing with this problem are economic incentives. So I think there's a whole variety of economic incentives we could put in place to put a price on carbon taxes and cap and trade systems, but also eliminating the huge subsidies we pay to discover carbon-based fuels. And we have no shortage of them today. There's no excuse for doing that.
Now, today, as we sit here, I think you've been to China roughly 150 times, something like that?
A lot.
So how did you happen to come to deal with China so much?
Almost David, by accident. I was in the Chicago office of Goldman Sachs working with clients in the Midwest, and I wasn't looking to move to New York, so the firm asked me to be a co-head of our investment banking division with a couple other individuals who were in New York. And as we were looking at how we might divide things up, where we had a big business in Europe and almost nothing in Asia, one of the guys said to me, "Why don't you take Asia, take China, because it's closer to Chicago than in New York." And I wasn't overly curious, but I was interested, and so I began going to Asia. And so I came back and I talked with my bosses, Bob Rubin and Steve Friedman, and I said, I get the feeling China's about to take off, and I would like to do a deep dive and look at opportunities in China. And and when I made the first trip there in maybe it was 1991, we had 5 people in the Hong Kong office. When I left to go to Treasury in 2006, I think we had 1,500 people in Greater China. So I put the pedal to the metal.
Today, we have 2 great economies in the world, China and the United States. In your view, is there a clash between the two of them inevitable, leading to actually a real war, not a Cold War?
Well, I would begin by saying that China is a strategic competitor. And there are some compelling differences when we look at our national security interests. And there also are some important shared interest in terms of global stability and things like climate change. But to get to your question, I'm concerned, really very concerned, about what I see as a militarization of the U.S. view toward U.S.-China. And I'll tell you what I mean by that. I take national security very seriously, but national security has bled into basically every aspect of the economic relationship. And I look at it and I say, I hear about Cold War all the time. And there is no way this is a Soviet-style Cold War. China is very integrated into the global economy. We're looking at the #1 manufacturer, the #1 trader, a big exporter of capital.
You got assigned for a little bit of your time in government to the White House under President Nixon, and you worked for John Ehrlichman. What was that like?
I started in the Pentagon in April of 1972, 6 weeks before the Watergate break-in.
Let's talk about your background. It might not have been predicted when you were growing up in Illinois that you'd be the Treasury Secretary, head of Goldman Sachs, a leader in knowledge about China. So you grew up in a farm well, actually, you were born in Palm Beach. How did you come to be born in Palm Beach?
I ruined a vacation. My parents were actually in a place called Stewart, Florida, and I came prematurely, so I was born in a Palm Beach hospital.
All right, but your parents had a farm?
Yeah, I had a farm, yeah.
And you grew up on that farm?
I grew up on the farm, right.
Milking cows and...
Oh, I milked some cows, I slopped some hogs, I baled a lot of hay. I did a lot of weeding in the garden.
And you just said, this is what I want to do the rest of my life?
No, it sure wasn't. I loved being in the outdoors. And my family, God bless them, would take me, we could go up into the North Woods in Canada and take canoe trips up in the boundary waters. We carried everything on our back. We ate fish we caught, picked blueberries, blueberry pancakes, and so on. And so I wanted to be a forest ranger when I was growing up in high school.
Okay, did your parents talk you out of that?
No, they encouraged me to do what I wanted to do, and they really encouraged me to get a good education. My mom had gone to Wellesley. Her father had gone to Yale, and so I chose Dartmouth because it was in the North Woods, and because it had small classes and was focused on the undergraduate.
But before you got to Dartmouth, you were a high school champion football player and wrestler?
Yeah.
So you were all Ivy football player, as you were a defensive lineman?
Offense, yeah.
Offensive. You're all Ivy, honorable mention All-American, and you were also Phi Beta Kappa. And your nickname was the Hammer. What was that associated with? You're good at building homes with hammers, or what?
No, it wasn't. I tended to be, I hit pretty hard, and I tended to be pretty forceful.
So when you graduated in 1968, you went to Harvard Business School. Had you had an interest in business, such you went right to Harvard Business School?
I'd wanted to go to Oxford and study English, but the Vietnam War was in full force. I had a low number in the draft. I got into ROTC program. I could get in at Harvard, and it turned out the easiest place to get into in those days was Harvard Business School. So I wish I could tell you this had been part of a career planning, but that's how I ended up at Harvard Business School.
So you graduated in 1970 from Harvard Business School.
Right.
And then you went to work at the Pentagon. How did that happen?
At Harvard Business School, you know, I basically had worked at Dartmouth. At Harvard Business School, I didn't have any business background. I spent most of my time out at Wellesley, courting my wife to be. But one class I did a fair amount of work in was a class that was taught by someone who had been a former Assistant Secretary of Defense, and he recommended me to work in the Pentagon for a small analysis group that worked on projects for the top leaders of the Pentagon, and that really transformed my life.
So you got assigned for a little bit of your time in government to the White House under President Nixon, and you worked for John Ehrlichman. What was that like? I
started in the Pentagon in April of 1972, 6 weeks before the Watergate break-in. And so it looked sort of like, you didn't understand the implications at the time. So I was there through the election. There was a landslide victory over McGovern. I got this big promotion, and I was going to be Ehrlichman's deputy for economic policy area. And then Watergate hit and blew up, and I watched these people who had very senior positions get carried off, and Ehrlichman, got convicted after I'd left. But I looked at a number of people there in deep, deep trouble, and it made a huge impression on me. But the positive impression was George Shultz was Secretary of the Treasury. He had two guys that worked for him that I had a very good working relationship.
So you went back to your native Midwest, Chicago, and you joined Goldman Sachs. How did that come about?
Well, I got to tell you, careers are a funny thing. As I said, I've never been big on career engineering. And when I graduated from Dartmouth, I didn't know what an investment banker was. But I learned in government that I liked multitasking, and I liked economic policy and finance and financial issues and problem solving. So I figured out that investment banking might be a good thing to explore. And I also determined I never wanted to live in New York. Ask me why, I don't know, but that was my view. So
you were at Goldman. You obviously must have done a pretty good job because you got promoted successively every couple of years or so, and you wound up being the CEO of Goldman Sachs, a job you did not aspire to, right?
Yeah, you didn't pick. You remember what it was like when we graduated from college and business school. If you wanted to run something, you didn't go into finance or investment banking. You went in because you liked the markets, you wanted to work with clients, you wanted to work on multiple problems. So that's why I picked Goldman Sachs. And then in 1994, the firm had some problems. I went off to New York, told Wendy, well, we're going to pick the next heads of the firm. Don't worry, I won't do that. And then I called her and said, well, guess what? I've been drafted to help turn things around, but I'll be here only for 2 years. And we always joked because that was a rolling 2 years. I was there for 12 years in New York, and I loved it.
All right, so you became the CEO, and Goldman prospered, did pretty well. And then George W. Bush becomes President of the United States, and I guess he made a couple entreaties to you to be Secretary of Treasury, but you repeatedly said you weren't interested. Is that right?
Correct.
Well, why were you not interested?
Well, you know, I enjoyed doing what I was doing. I had a family that was vehemently opposed to the president. So my mother, my wife, my kids. I think also at the root of things, although I didn't tell myself it was a reason, I didn't, you know, I knew I was doing a pretty good job running Goldman Sachs. So I said no a few times, and but they kept coming back. And the last time, Jim Baker made a pretty compelling case, and then more than anything else, what hit me was I looked at things and I said, guess what? I go around, I recruit all the time at business schools. I tell people, welcome change. Change is your friend. And we all hate change. And maybe it was fear of failure that was preventing me from serving my country. And as soon as I saw that, I said, I'm not going to let that stop me. And so I made the jump.
But when you joined the government as Secretary of Treasury, you expected the economy would be in reasonable shape because the economy seemed to be in reasonable shape. Right. Is that correct?
Yeah.
So what happened?
Well, very early on, the very first meeting I had with President Bush at Camp David, when he got his economic team together, he wanted me to talk about entitlement reforms. That was one of the things that brought me to Washington. I told him I wanted to talk about a financial crisis. I didn't see one coming like we had, but I told him I saw excesses, and I'd seen them in '94, I'd seen them in '98. I thought we were due for turbulence in the market. So the whole discussion was about that.
Ultimately, the banking system came back and the financial system came back. But as you look at the system today, could something like that happen again?
I hate to say this, but we have less authorities today than we had then.
So Lehman was on the verge of going bankrupt, and you did not have at that time the authority to save Lehman. I know everybody's asked you about that since then, but in hindsight, is there anything you could have done differently with respect to Lehman?
Boy, I'll tell you, I don't think there was. We tried everything we could to get a buyer. Lehman was a bigger problem even than Bear Stearns because they were insolvent. There was a big capital hole. There was no way that a loan was going to solve the problem. It was going to take capital or a loan guarantee. And the thing about Lehman, as I look back, we tried very hard and we came very close to getting a deal done with Barclays. But as we look back on it, as bad as that was not the worst outcome that was possible, because the crisis had been grinding on for about a year. There are many weak financial institutions. We had three going down the same weekend, Lehman, Merrill, and AIG. It turns out we had one buyer. And Bank of America bought Merrill. If they bought Lehman, Merrill would have failed and it would have been a bigger problem. The other thing I will say about Lehman, which was that as bad as it was, and it accelerated the crisis, that it was a symptom, it wasn't the cause.
But ultimately, TARP legislation, so-called, did get through Congress, but it failed in the first vote in the House. What did you think was going to happen then when it failed?
Oh, boy. We had a number of terrifying moments, and that was really one of them. Because here's the best way to describe it. For months, we'd wanted to go and get these fiscal authorities. It was a big thing for the president to authorize this because there's no way you wanted to go and say we've got an emergency and give us these authorities and then not get them and be naked, you know, right there with nothing you can do to stave, to prevent the meltdown of the financial system. So when we went to Congress, the cupboard was bare. The president needed to look Ben Bernanke in the eye and have him assure him there was no authorities the Fed had. There was nothing more we could do. We had to go and we absolutely had to get these authorities.
So now the legislation was designed to buy assets initially,
Yep.
but you ultimately decided not to buy assets, but to inject money in various banks. Is that correct?
I had felt putting capital in banks it was the only way I'd known to do it was nationalize banks. And when you do that, it's a very, very costly thing to do, and it precipitates other bank failures. And I'd wanted to avoid that, and I had this theory that it was these illiquid mortgage securities that were clogging up the credit markets. If we bought them, it would increase capital and recapitalize the banks. But in the 2 weeks we were up at Congress, the situation worsened. We had 2 huge bank failures in the U.S. And so when I went to the president and basically said to him, guess what, sir, illiquid assets purchases aren't going to work. And he said, well, you told the whole world that's what you were going to do. What are you going to do? I said, well, we're just going to have to explain we made a mistake and we need to put capital in the banks and reverse ourselves, and that's what we did.
Okay, and ultimately the banking system came back and the financial system came back. But as you look at the system today, could something like that happen again with the legislation we now have? Are we better able to protect against something like that?
First of all, our financial system is much stronger than it was. The banks are better capitalized. It's much less likely to start in the U.S. There's less dry tinder to start a fire. But, and I hate to say this, but we have less authorities today than we had then. And the number one problem we had then, the number one problem by far, was we had a financial system that had outgrown our regulatory system. Our regulatory system and authorities had been put in place after the Great Depression when there was a run on banks, and we had a situation where 60% of the credit was flowing outside of the banking system.
Now, you worked closely with Ben Bernanke then, and also Tim Geithner, then the head of the New York Fed. In the current administration, there's been tension between the Fed and the Treasury and the Fed and the White House. Do you have any comment on whether the Fed is sufficiently independent or not, and should we do anything to make sure it is more independent than it already is?
I got to tell you, the thing I'm most proud of was that the solution came on a bipartisan basis. I think the last 2 times Congress has acted on a bipartisan basis on anything that was consequential was the TARP authorities and authorities for Fannie and Freddie. So I think where we worked across administrations. Now, to get to the current situation, I never ever want to bet against what we can do as a crisis, during a crisis. So I do know Steven Mnuchin is very competent and understands financial issues. I have a very high regard for the chairman of the Fed. And I believe that if we had a crisis, they would figure out how to work together.
Any regrets in this incredible career, and what would you see as your legacy?
If we hadn't had the financial crisis, you know, I'd set up the first environmental department at Treasury. I'd raised clean technology funds to be housed at the World Bank. President Bush had said that I could work on coming up from some standards for carbon emissions, you know, because there are a lot of problems in the carbon market. There's plenty of things I wouldn't do if I hadn't been waylaid by the financial crisis. But I actually look back on it as sort of the honor of my life to get to serve my country during a time of crisis and help us get out of it.
Thank you very much for a very interesting conversation, Hank, and thanks for a great career and your service to our country.
David, thank you.
Thanks very much.